Bit of news about AFCA. We were talking about AFCA, what they do. So they are a complaints tribunal. So they made an insurer pay out a TPD claim.
So what happened here was the complainant went and tried to make a claim after they had an accident. They were unable to work. They didn't try and claim on their TPD until 2016. What happened was they made the claim, the insurer declined it. They went back again in 6 months as the trustee, so the super fund said, no, I think you should try again. So they tried again and again were declined. So in 2019, they tried again and still the insurer declined the situation. AFCA got involved, had a look at the situation, and their final determination was that the TPD claim should have been paid. So AFCA had a look at what the situation was in 2007 and determined that they did meet the definition of being TPD'd. And so after all of that, AFCA has now made the insurer go back and pay the claim with interest.
Hey there, this is a new series we're calling This Week at Skye. So the purpose of these videos is to get a bit of an understanding about what we're doing at Skye for our team, our clients and our partners. So today I've got Ashley Campbell. Thanks for joining me, Ash.
Hey Phil, how's it going?
Great. So we're going to talk about a few things in this video. So we're going to talk about like what's happening industry-wide, and then any client scenarios you've been working on this week, and then anything that's coming up. So there's been two big bits of news recently, one from AFCA and one from ASIC. So quickly, first of all, who's AFCA and ASIC?
So AFCA is the complaints body. If you have an issue with any sort of financial product, they're who you can go through if you want to make a complaint. And then APRA? ASIC. Oh my goodness.
Yeah,
ASIC,
they're all the same.
ASIC and APRA are the two main regulatory bodies for financial advisors. And so ASIC is overseeing all investment and all sorts of financial products.
Yeah, cool. So there was a story about HCF Life were fined $750,000 over misleading policies. So talk to me, what do they do?
So HCF they offer some life policies, and in their PDS they have written in there that they can have a look back at any pre-existing condition that you maybe knew about, maybe didn't know about. Now, as you're probably well aware, Phil, this is against the Insurers Contract Act, which says that you have to be a reasonable person needs to make their disclosure.
Yep.
You can't expect someone to know about something that
they
they
don't
know about,
Yes.
which is what HCF were saying they would exclude you for in their policies.
Yeah. So it was interesting. They were basically, saying that, hey, even if you didn't know about this issue and you go and claim on it and then we find out that,
Maybe
you had
could've.
it, then we're not going to pay out a claim. And I was talking to Potty earlier and he's like, oh, is this a new change? And I said, well, the Life Insurance Act has been around since, 84 or something?
Yeah.
So it's like, it's not that new.
No.
So they were fined
Yeah.
$750,000.
Yeah.
And one thing that I think about this is I do think about these type of policies, because it's a direct policy. You don't go through an advisor to go to HCF. The HCF's main business is health insurance. So really they have set up a life insurance arm to sell to their members, their health members. One of the things I think about is if an insurer had this contract that we work with, we wouldn't recommend them because, I mean, it's illegal. Like you're not allowed to do that. It's against the law. And so what is the requirement? So can insurers, they can obviously put exclusions on. So like what is the requirement that life insurers have to abide by?
Yeah, and so that is a slightly newer concept, but there's still always been some sort of duty of disclosure. I think it was 2021, is it? When sometime. Wording of it changed to be a duty to take reasonable care. And so as a person applying for cover, you need to make sure that you're not misrepresenting your situation when you're disclosing your health history with the insurer. So anything that a reasonable person would remember. One of the examples that we like to give clients in our meetings is, you're going to remember that you broke your arm when you were 15, but you may not remember when you bumped your knee when you were 5 years old and maybe you had a stitch for that and went to the doctor. Whatever a reasonable person would be expected to remember.
Yeah.
Which, again, isn't something that you don't know about.
Yeah, exactly. A reasonable person, if you don't know about something, shouldn't be excluded from a claim.
No.
And so, and is $750,000 a lot? We were talking about it upstairs and going, it doesn't sound like that much. How much does HCF make every year?
Yeah, so HCF, from what we were looking at, was $92 million. So
$92 million they make every year. Okay, and what's that as a percentage? You're the
that
ex-accountant?
that was a little bit less than 1%, so about 0.8%.
1%, okay.
Yeah.
And to be honest, if they were able to decline a life insurance claim, it's just one claim that they can decline based on that contract that pays themselves back. So good thing, great job, ASIC, keeping insurers honest. And, breaching legislation is a good way to keep people honest. So the next bit of news about AFCA, we were talking about AFCA, what they do. So they are a complaints tribunal. So they made an insurer pay out a TPD claim. Tell me about what happened.
So what happened here was the complainant went and tried to make a claim after they had an accident. They were unable to work. From about 2006 is when they had their accident. They didn't try and claim on their TPD until 2016. What happened was they made the claim. The insurer declined it. They went back again in 6 months as the trustee, so the super fund said, no, I think you should try again. So they tried again and again were declined. At that time, they were unable to work due to some injuries to their foot and leg, I'm pretty sure. And then they also had some ongoing mental health issues in the background too. So in 2019, they tried again and still the insurer declined the situation. So what happened was they made a complaint and the AFCA got involved, had a look at the situation, and their final determination was that the TPD claim should have been paid. So they had a look back at what the PDS said, and it said you have to be unable to work after a 6-month period of not being able to work from when they had the accident, which would have been around 2007. So AFCA had a look at what the situation was in 2007 and determined that they did meet the definition of being TPD'd. And so after all of that, AFCA has now made the insurer go back and pay the claim with interest from, I think, when the first application was made, so from 2016-ish.
Yeah. So there's a whole bunch in there to unpack. Number one, it's a good thing for any of our clients watching that even if you don't claim straight away, you can, like if you were insured at the time of the incident, illness, sickness, whatever it is, doesn't matter if you go back 10 years later, you can still make that claim. So that's always good to know. The other thing is if you don't get the outcome that you deserve and that is reasonable, there is AFCA as a complaints tribunal to go, hey, I think this isn't okay. And it is, AFCA is an amazing kind of system where, policyholders or even like clients of financial advice can go and say, hey, I don't think I got the right outcome from the financial institution. And we did a huge body of work last year at our advisor offsite where we read heaps of AFCA determinations, because if you want to geek out about AFCA determination, you can read all of these things. And in this article, we went, by we, I mean you, went and read the determination. And so, we can kind of read like what is AFCA's thinking about all of these things. So when we did it last year, we were looking at like what are the complaints against financial advice and, is there any exposure we have at Skye? How do we make sure we're doing the right thing by our clients, but also protecting the business against any kind of undue complaints? And I was really surprised at the time how reasonable AFCA were. Like the AFCA is always seen as this big boogeyman in the industry, like, something to be scared of. But AFCA has been, from my readings, really reasonable, and they're also engaging the industry a lot. So, and actually I'm not 100% sure this is true, so take this with a grain of salt, but I actually don't think the insurer needs to make the payment. I think the AFCA can make the determination.
They make the determination.
But the insurer can go, thank you for your advice, we're not going to still do it. Now, there's a lot of pressure on them to make the payment, so I believe they will. But that's one interesting wrinkle about AFCA.
Yeah, that's really interesting. Something that I was reading in this determination that I found quite interesting was that they were saying the insurer applied a theoretical approach to assessing if the complainant could go back to work, as opposed to a real-world application. And so they mentioned that throughout. They kept coming it back to saying it should be about the real-world application. And I think a lot of people imagine that in the legal space, you are just thinking about theoretical. So it was quite interesting to see.
Yeah, and all of these things it always impacts our advice. Like, how do we think about it for our clients? Like, one of the issues with this claim is it's through the super fund, the TPD zone through super, and it's based on, can you do any job the insurer can reasonably expect you to do through your experience or through training. And some newer policies are based on like retraining. Can you retrain into another occupation?
Yeah.
And so that means it's going to be easier for an insurer to decline a claim because, well, they can say that you can be retrained to go into this other thing. So super important, in my mind, to get the certain policies that we recommend, like own occupation TPD, kind of protects against this. Like, well, theoretically, you can retrain to do A, B, and C. And it's not great the insurer decline it, but at the end of the day, like, how annoying. Imagine having to go through AFCA and go through all these TPD claims experiences, decline, then have to go through AFCA, like, in a time where you're not working. It's pretty horrible situation to be in. So that's why we like setting up policies that give clients the kind of the optimal chance of getting a claim if that happens.
It was 9 years, since he made that first attempt at making a TPD claim. And that was already 10 years after not working. So it's a very long process.
Yeah, the other topic I wanted to touch on is I got a really good friend of mine, a great financial advisor who I have a lot of respect for, put a video on LinkedIn the other day talking about they only work with 3 insurance companies because they've got the relationships there, they've got all their policies there, and they're insured with those 3. And I was watching it thinking about us at Skye, and we go across the whole market. We don't discriminate against any insurer. We will work with everyone. I sent it to you, and I was interested in kind of your thoughts about the different kind of philosophies, because my belief is every advisor, you talk to 10 different advisors, there's 11 ways of doing something, and they're all reasonable. What was your thought on the kind of their take on their insurance philosophy?
Yeah, it was really interesting because our philosophy is so different. We have had discussions in the past about, are we going to take anyone off our product list? Are we going to keep everyone there? And time after time, we keep coming back to just keeping everyone there. And so it was really interesting to hear that they only worked with 3. And their reasoning was that they, have those closer relationships at claim time. They can maybe fast track things if need be. But I know here at Skye, because we do just specialise in risk advice, I feel like we do have pretty good relationships with most of the insurers as well anyway, and there have been instances where you've gotten involved in a claim and fast-tracked a process or stepped in and gotten a better outcome than a client would have had otherwise. And so it was really interesting to hear just think about could we be doing things differently? But I think we do what works best for us, our business, our clients, and it definitely sounds like they do too. They had a really good thought process behind everything that they were doing, why they do it, and it didn't sound like their clients were going to be any worse off for the outcome.
No, yeah, I mean, as I said, I respect them as a business and I respect kind of the philosophy, but the reason we've kept it open, and you said we've toyed with the idea of reducing it, because it does make it easier as a business to go, I know their processes, their systems exactly, let's just go with them. But we've seen time and time again, we've seen underwriting outcomes, so the exclusions or loading, be so wildly different, and it moves all the time. It's like we're trying to build this building on like sand that's constantly moving when it comes to underwriting. Like everything changes all the time.
When I saw the 3 insurers they worked with, I was thinking, but this insurer has this situation that they're missing out on, and that one and that one. So yeah. So it's we have our own philosophy, and it helps because we have a lot of clients going through the process that we've got a great relationship with everyone, because being one of the biggest insurance writers in Australia, it does help that everyone kind of wants our business, and I've had insurers come and recommend that we only use 3, as long as they're one of the 3. Then they're like, it's definitely going to be better for you. And I was like, okay, I appreciate your suggestion, but we won't do that. All right, now let's move on to client stories. Like, what client situations you've been working on this week? Yeah, I've had a couple of interesting things this week. It's things that don't come up very often. One of them is a client whose father has a significant health situation, and so just for his own peace of mind has let us know on the fact find that he was thinking about going and getting genetic testing done. Now, if you hadn't told us that, the insurer's situation would have been different, but because we are aware that he's contemplating getting the genetic testing, the insurers have said, we're not willing to offer any cover, but if there are thresholds that the cover can be taken out at where they don't ask about genetic testing, and we will likely be able to offer cover in that situation.
Oh, it's a minefield. Yeah, genetic testing is a big one because the government, the last and now current government, made a big announcement that they're going to change genetic testing rules, and all insurers are like, yeah, that's good in theory, but we want to do a risk assessment. So like the insurers are a little bit against it because they need to do some risk assessment. But in the currently, like if clients say they want to do genetic testing, or then they get caught under these, well, maybe there's an issue. Well, no, I'm just being proactive about my health. And so, yeah, that's a frustrating experience, but it's one that we've got to kind of walk through our clients. And this is a good reminder for any clients watching, if the outcome of your policy was X when we set up the policy, that underwriting changes over time. So maybe today, reviewing the policy, we'd get a different outcome. And so maybe we'd get worse or maybe we'd get better. So it is important to kind of keep in touch whether our clients got insurance with us or someone's watching this who got insurance somewhere else. It's definitely worth being in touch with the advisor and go, hey, would this be any different?
Absolutely.
Something that I dealt with this week, and I don't work with a lot of new clients, but this wasn't a new client. I do a lot in our claims work, and so I had a phone call with one of our clients who was going through a claim for her income protection, and unfortunately, she's got breast cancer, and she just said to me over the phone, just kind of off the cuff, that and this has been, we've been working on this claim for a little while now and getting it through, and she's like, oh yeah, I did have trauma insurance a few years ago, but we just cancelled it. And I was just thinking, the clients are earning good money, financially stable, had the ability to afford those trauma premiums, but decided for whatever reason, and they weren't clients of ours at the time, to get rid of it. And it kind of just gave me this reminder that, yes, it is important for me to continue to remind clients, this is why you pay your premiums. We don't know what's going to happen. We don't want to scare you to keep paying your premiums because that's not our job. That's not the purpose of what we want. But keep it because you might need it.
Particularly trauma cover, your need for that normally only goes up with age.
Yeah. And it's something that we see a lot. Fortunately, she had a feature in income protection that meant that we can likely get 6 months of payments for income protection. But it's still, even just, I wrote it down actually. It was something like, that's good, but it'll go towards, only some of the medical cost. And what did she say? She said she had a sibling come over from, I forget where, maybe the UK, come over from the UK and stay with them. So it's like, that'll cover some flights and the costs. And people think about, well, if I have cancer, I'm fine. We'll go through the system or private health.
Yeah.
But it's all those, ancillary costs that happen. All right, any other interesting client scenarios this week?
Yeah, I have one more fun tangle that I get to play with this week. And so the clients called me up and said, hey, you noticed that we have a cervical spine exclusion, but I thought it was just a cervical cancer exclusion for my TPD cover. So she's gone and called up her super fund, and what's happened is she's disclosed to them that she had an irregular pap smear. They've put on a cervical exclusion.
Okay.
And then not realising they've gone and clicked the wrong button and put a cervical spine exclusion instead of cervical cancer for her TPD. So she's called them up and said, hey, that's not the situation. And also I am now back to my regular pap smears, so can we get this removed? And they've said, yeah, we can remove it for you, but we want to have a look at your whole health history again, which is, from my understanding, not how the system generally works.
This is an insurer who, it's actually a super weird situation. The super fund own an insurance company, which they're the only one in the country that do. But making a mistake, clicking the wrong button, just fix your mistake.
Yeah.
What are we talking about? That's they're fun wrinkles. These
Yeah.
problems that we're going to solve for our clients.
Yeah, so I'll be getting on the phone after this and digging into that one a little bit deeper for her.
Yeah. Oh, that's funny. Well, not funny. It's because imagine claiming. I mean, I guess like if I'm thinking about this, if the client went and claimed, then she could argue that, hey, based on the disclosure, that was an incorrect exclusion that you've put on.
And in the sheet that they've given her, it says two contradicting things. There's a subheading for the exclusion saying it's for cervical cancer, and then the description for it is cervical spine. So
yeah,
what are we doing?
Yeah, it's one of those fun wrinkles that we've got to deal with. All right, well, what have we got coming up this week at Skye?
Not a lot this week.
I've got an announcement this week. It's your birthday, Ashley.
It's my birthday.
Yes. It's very exciting. So now we got like a bit more, maybe 15% of our workforce come in the office. I think around that. I'm doing the math in my head. Around that come in the office. So most of the people aren't in the office, but we're going to get baked goods for your birthday made by
me
yourself. So happy birthday.
Yay.
You get to bake your own goods.
I love baking and it's my gift to everyone else.
Yeah, and we definitely enjoy your baking. So we've got that coming up. Anything else? I don't think we got too much to know. Well, I mean, we had an announcement this morning internally about a whole bunch of massive changes, but we will announce them on these videos in time to come.
Yeah.
But
when we work through the kinks.
Yeah, once we sort out how do we actually execute it properly. Probably the biggest changes in 2 or 3 years within our business. So excited to kind of announce that when it's ready. Awesome. Well, thank you for joining me today.
See you next week.
Yeah, see you next week.